All right, thank you guys so much for coming. I'm Z. I've had the pleasure of organizing the sessions that are happening in here today and yesterday as well. Thanks so much to Capital Factory. Thanks to ATI, Advanced Technology International, for sponsoring everything in here. If you guys don't know ATI, they are responsible for over $3 billion a year in federal funding going to startups and other non-traditional defense companies. Definitely get to know them. Fantastic to work with to help kind of make it easier to do business with government if you're relatively new to government contracting. I want to hand it over here to Josh and his fantastic panel for a session on defense investors. So please join me in welcoming Josh and the team to the stage here.
Welcome everyone to another fantastic installment of this conversation. Thank you to ATI, thank you to Capital Factory, South by Z. Thanks for putting together such an incredible group of experts here. And I want to thank the audience as well, because I know you guys are the truly dedicated defense innovation enthusiasts, because it's about 100 degrees in this room, about 100% humidity, and it's like still counts as the morning after a weekend evening at South by. So I know you guys are here because you really want to be here, and I appreciate that. So thank you. This is I was gonna say this is gonna be a hot and spicy conversation, but I didn't mean it to be so literal. But that's cool. Anyway, so my little standard routine is over. Let me introduce these incredible folks that we have here, and fortunately, for the most part, people I've all had the pleasure of working with in different capacities over the course of our career, and so it's great to have people who've really been in the trenches together, sharing, really candid perspectives on this industry. And so let me tell you who you have the pleasure of hearing from today. I'll start with David Rothstein. David was with the Defense Innovation Unit as an Air Force officer in uniform when I was serving in DoD, and he is really one of the leading experts in a lot of the challenges that startups face, because he's experienced them in his public service career. We're going to talk about CMMC and ATO and all the compliance friction and stuff like that. And I will tell you, if you like what you hear today, check out his congressional testimony from last week. He really, really moved the needle. And we're going to ask you to talk a little bit about what happened on the Hill, what does it all mean. You can tell us this major accomplishment. And I'm also going to ask you about sweat equity, which I didn't know about. And so that's also someone asked a question about that, because that's kind of an interesting thing that he does. Also, to his right, Chris Moran from Lockheed Martin Ventures. I'll confess, when I was starting out the Defense Innovation Board, we thought the primes were the enemy, and Chris and his career and his accomplishments really convinced me how wrong that is, and how they're the indispensable partner. And I think the commitment that Lockheed has made to tripling the size of Lockheed Martin Ventures and the way they changed the way Lockheed relates to startups is really an example for everyone. So I'm thrilled Chris is here to talk a bit about what is changing in the prime community, how they're thinking about venture capital, how they're thinking about the startup ecosystem, and how they're really changing to meet the moment. So Chris, thank you so much for being here and part of this conversation and making sure that the prime bashing has to take a pause here at South by. A respectful pause. And then also, Morgan Malik is here. Also amazing. Started out at Stanford, got excited about defense and national security because she is a military brat. Actually, I worked with her mother, who's one of the most respected Marine Corps generals in the tech space. And from there, went to Equatel and now works at Cerberus, one of the most important and influential investors in all of venture. And so I'll hear a bit from you and your experience. And then it's a little tricky for me as a moderator. Z gave me a more advanced course moderation because I have two Morgans in venture capital. So we decided we're going to have Ben Morgan and Cerberus Morgan. So I'm really excited to have Morgan Kitzig with us. She's going to be Ben Morgan today. And as a New Yorker, I got to tell you, it is nothing cooler than having an NYPD Intel analyst on your panel. I mean, how amazing is that? I feel like we got a lot of military intel people here, but we only got one NYPD intel. That's pretty badass. I think I can say that. And then from there, went to a Navy career and is in the reserves today. And she is an investor for Venrock. Venrock, of course, has taken a huge stake in supporting dual-use public sector defense innovation and all these things. And Morgan leads up those efforts and has been doing an amazing job pushing that. So you have an incredible lineup here today. And with that, we're going to dive right in. with the speed round of icebreakers. I should not call them icebreakers because I'm sweating already. But let's start with this. Tell me about the really fast, rapid fire. Tell me about the investment you're most excited about, or investment category you're most excited about right now. Like, what is on the top of your docket as being like a get feet? We'll start with you, David, and come on.
Sure. So it's awesome to be here. Thank you, Josh. Thank you, fellow panelists. I have a company that we invested in 3 years ago, co-leading their Series A. They're a space startup. They're launching tomorrow of Weather Holds, and it's going to be a pretty exciting capability, putting a satellite in very low Earth orbit. So that's sub 300 kilometers, and when you're closer to Earth, everything that you look at is just in way better resolution, and the implications for intelligence gathering as well as other commercial use cases is just incredibly compelling. The company's name is Albedo, and so pay attention to the Transporter 13 SpaceX launch tomorrow.
Thank you. We just happen to have the CEO of the company I'm talking about back there, Jason. So a company called Crossbow, solid rocket motors. Not a lot of dual use in solid rocket motors, but certainly very, very important to everything that we do. And there's a global shortage of these things, and they're hoping to fill the void. And they're based right here in Luling, Texas, not far from us. So that's one of our top.
Thank you for having us. I think I'll answer this question by commenting on a space. So I think quantum computing is really exciting. It's a uniquely, dual use category, and I think there's lots of public and private sector interest in the category. So, on the private sector side, maybe to start, we've seen recent announcements from Google, Amazon, Microsoft, kind of about their developments in quantum computing, and maybe on the public side, just significant commitments at the national level and state level to embracing quantum computing. So at the national level, the Quantum Benchmarking Initiative is a recent DARPA initiative in the space that's been generating a lot of excitement. And then at the state level, lots of states, Colorado, New Mexico, Illinois, all trying to kind of become the hubs for quantum computing in the future. So that's the space I'm excited about.
So you mentioned Google, Amazon, and Microsoft's announcements, but you have a favorite, right?
I would say
you don't have to answer. You don't have to answer. Morgan, over to you.
I'm very excited about it's working. Is it?
Yeah.
Okay, great. I'm very excited about companies that are generating net new data. So we have an investment in a company called GenLogs. We're sort of talking about it as high margin hardware, this sensor and analytics combination. So very excited about that.
Awesome. Okay, next speed round question. What is your biggest regret as a VC? What is the one that got away, the one that you missed?
Too many. I'll say this though, there are a lot of companies that have had some significant up rounds, and when you're an early stage investor and you're also trying to raise capital, you'd love to have some good MOIC stats. And while you didn't think the company would be able to get into the billions of dollars of valuation, you kind of wish you were part of it just for those implications. But all that being said, I think all the investors, there's so many great companies, we only have so much capital, and the saying no part is just really tough.
Yeah.
It's great timing. I'm probably familiar with Bessemer's anti-portfolio, so I was actually just doing that for our investment committee, and there are probably about 12 on there. But the one that as a strategic investor, we often run into headwinds within the company, right? There are groups in the company doing something similar, they don't want us to invest in it. And one that I really regret not doing is a company called Loft Orbital. I don't know if anyone here is from Loft Orbital, because I think it would have provided a real quick pathway to test payloads that we couldn't do ourselves. And so we keep looking at that one, and wish we had done that one. But we got 9 or 10 more that we wish we had done.
Yeah, I'll just echo David. I mean, I think there are so many companies that we talk to and get excited about, and it may not cross the line because it's too late stage or whatever it is. It's just not a perfect fit. But, I started my career at InQtel, which is a prolific investor in the space. So for me, starting my career there was actually such a unique opportunity to see, so many of the companies in these different parts of the national security innovation space that I hadn't even realized were important, coming straight from my master's program. So, that was a really unique place to start. But yeah, echoing David, there's a lot we can't do, unfortunately.
One of the things that's challenging about different venture firms is you have LPAs, limited partner agreements, and it can sometimes limit what your strike zone is. So I would say the ones that got away for me are all slightly outside of the Venrock portfolio strike zone. I'll highlight one because it's a capital factory company, and I absolutely love the CEO. Her name is Sassy Jubilee, and she's got a company called Venus Aerospace. And if there was any way I could get Venrock to do a hypersonics company, I would have, and it would have been in Sassy's company.
Let's stick with you for another second, Venrock Morgan, and I'm going to turn to you this as well, which is, you're an actively serving in the Navy intelligence corps right now. You're a reservist, but you put the uniform on. Some days you come to work, and other days you come to work, you probably have like a Patagonia vest or something. It was Venrock on it. And you talk about what that's like to have those dual identities in this space and the serving in the military and also investing in technologies the military needs.
It can be a real double-edged sword. First of all, it's a privilege. It is an absolute honor to continue to serve and be able to put the uniform on. And frankly, the more often I can do it, the closer I feel like I stay to reality, which is one of those things that's challenging in venture capital because you're supposed to be sort of visioning what the future looks like. So on the positive side, it gives you real proximity to the customer. I mean, you get to, again, walk in the shoes of who you're trying to sell to. And I was reminded recently of this quote that's at the Army Infantry Museum, which is like very oriented. It's an Ernie Pyle quote, I'm gonna get it wrong. But it's basically like, remember the combat infantryman, because without the combat infantryman, you can't win wars. And I oftentimes, we live on the venture side in this world of autonomous robots and what does the future of unmanned systems look like? And so remembering that you can't win wars without the infantry, and infantry, broadly defined, I think is one of those things that I think is very positive about remaining uniform. I think the flip side of that is it's very easy to kind of see the glass half empty for some of the companies that you end up getting pitched because you've got scar tissue. Like we all who have been in the military, I think, have some scar tissue around technology that has failed us. And so it takes an extra leap to kind of overcome that potentially negative experience and say, okay, even though there's a graveyard of companies that have tried to solve a particular problem, how do we actually build the next generation of what the warfighter needs? And so I think it's a real honor to be able to walk in with one foot in both lanes.
It's really inspiring answer. Silicon Valley says focus on the user and forget users and infantrymen. That's actually really powerful. Morgan, let me turn to you, Data. Same question, your time at DIU and your time in the reserve today.
Yeah, well, Morgan, I think that was a fabulous answer. So I get to still serve in the Pentagon, which was my last duty assignment. And so I spent about 4 weeks in the five-sided puzzle palace, and it is a dose of reality and humility for what people have to go through from a bureaucratic standpoint to help enable technology companies have success. And they are so busy, and as a tech optimist on the outside, and always being able to see, obviously this will scale, and everyone will love it, and it's going to generate hundreds of millions of dollars. There's just a lot of competing interests inside the department that if you're going to be a pure defense tech startup, you really have to have a huge coalition of people going to bat with you and walking in their shoes and understanding how can you help them get to yes and knowing what they're up against. It's just a reframing that I get 4 weeks out of the year to then impart upon our startups, as well as our firm when we're thinking about investment decisions in certain technology areas. So it is a privilege, but it's humbling.
Chris, let me turn to you as well. I calculated that you have as much career experience in the industry as all of the other panelists combined.
Great.
I was saying this backstage as a gravitas. You're very gravitas. But that also means that you bring us an extraordinary perspective. And so I wanted to ask you, what are you seeing today in this current investment climate that really surprises you? Because you've seen everything.
I don't think it's any secret that to see, as David was alluding to, purpose-built defense companies. I never thought the venture industry would lean in on that. And something to what you said, Morgan Venrock, was LPA agreements prevent most venture firms investing in defense-specific companies, particularly weapon systems, right? But seeing weapon systems get funded, loitering munitions get funded, it's a little. It's a great opportunity, right? All these companies, all these people that have all this kind of wellhead of information and knowledge are coming out and creating companies that the nation could certainly use. But I think we may struggle with the business models for these going forward, right? How does that work? If the government doesn't buy, what happens to these companies? What happens to this tech? So that's kind of where I see now. Very happy that it's coming in there. Many, many things that we can look at, but what's 2 years from now, 3 years from now going to happen with these companies?
And let me turn to you, Cerberus Morgan, the booking end of the other side is sort of a foil. I think it's so interesting for you coming into this industry, and I wanted to ask you the same thing. Like, what is something about venture that you think most people get wrong? Like, now that you're in it and you're seeing it from the inside, what for you is the takeaway you want most people to understand that you think they miss?
Maybe two comments here. So one kind of tied to what you were saying, Chris, is I think that's why the dual use thesis is really attractive to me and to the team that I work with, because if commercial's doing great, that's awesome. Maybe the government market is constricting, and so that's great that you can lean into the commercial customers, or vice versa. Maybe if defense is growing quickly, your commercial customers their appetite for spending is actually shrinking. So I think that's why that thesis is really important to us. And then in terms of something people get wrong, like I think this community uniquely, like the group of folks that are focused on technologies that are actually delivered to the warfighter and are generally looking at technologies that are deep technologies that are, years and years out in some cases, like it takes a lot of metal to invest in those companies and support them over time, and more importantly, to be the people building those companies. So I think the thing that I love most, and that maybe people get wrong from the outside, is like the community of folks I've met in the defense space is like super, super tight-knit. Everyone's kind of out to help each other and to ultimately deliver better technology to the people that are using it to defend our country and on the front line. So
yeah, that's great. Being a founder takes a lot of grit. Being a defense founder takes like even more grit. All right. I promised you guys news that you could use. So if you have a notebook, take it out. Or your phone, like take some notes. You're about to get some like real knowledge here. Morgan, I'm going to ask you this question first because I know that you like it. What is the thing that you read or listen to that gives you an edge? We're going to make a reading list for this group here.
Okay, I'm gonna. So I'm relatively new to venture capital. I've only been on the venture side a little over a year. So I would say I'm listening to a lot more on the venture side than I ever did. There's one podcast in particular that I found super helpful, and this may be a more traditional answer for some of the room, but it's Acquired, which is just an amazing podcast that gives you the history of some of the most storied names on the planet. And then I would say, so I'll stick with Acquired.
Yeah, I completely agree. Acquired is one of my favorites. I am a prolific reader and listener, so I in preparation for this panel, I did look on Substack to see how many newsletters I subscribe to, and it was 171. Like, I just consume a lot of information. So a newsletter that I helped start, and no longer am a part of, but it's called Defense Tech Jobs. It's helps convene the defense tech space. So, plug for my friend Noah who continues to run that. But I would say I just read a lot of books. So, in terms of great books I've read recently, Playground is one. It's like a commentary on the future of technology, and kind of what becoming like a tech-first society looks like over many years. And then we're also talking about defense-specific books. So I really liked The Situation Room, which is a book about how the Situation Room is used across administrations over many, many decades. So that was fascinating for me as well.
Acquired, especially the episode on Lockheed. Episode 11, right? You can sit through for 3 hours, but I learned a lot. I learned a lot. And oddly enough, it was one of the few episodes they didn't actually have anyone from the company talking. So that one, and then the episodes with Morris Chang on TSMC. I spent 30 years in the semi industry. Just fascinating to see how he built that company. I was kind of a witness to that in my previous life, so I love that. But as far as reading, I'm a voracious reader, mostly periodicals, 5 newspapers every day, 5 or 6 magazines, scientific, everything that's in there. And you'd be surprised how great the defense writing is. There's always a columnist that does some really good work on different things in there. And if you want to stay up to date, those are probably the best ways to do it.
Any specific ones?
Which?
Reading.
Periodicals wise, oh my God, everything, whatever slots into my my Apple feed and everything else. I mean, I'll think of it. I'll give you some names afterwards. But, yeah.
I paid a fortune to subscribe to the information, but I find like that's actually like really good reporting on what's happening with tech and investing. So thank you.
Great. So, fun story on Acquired, because we all have one. Ben Gilbert is on the board of one of our recent startups, Starfish, and he's actually he's fantastic on board. So he's not only great on podcasts, on boards too. So I'll give 2 plugs. One, I read my teammate Maggie Gray's Gray Matters blog. It's on Substack, and I think she does just an incredible job distilling a lot of complexities of the commercial world and then relating it to the national security environment. So, and she does great research and very data driven. The other one that I do read a lot, well, 2 others actually. So The Merge comes out on Sunday mornings. So that's the Sunday morning read. I did not. Sorry, I'll get to it. And then the other one, running around here, Pete Modigliani and Matt McGregor and their defense acquisition news. It's just a great summation of what's happening in the defense tech world that you ought to be paying attention to. And I think they both have like paid versions. So support your artists, not just the musical variety.
The defense acquisition artists. Oh my God, that's great. That's gold. Thank you for that one.
Can I add another?
Yeah, of course.
one?
Yeah.
One of the things that I think has really shaped the way that I think about both the venture side and the defense tech side is Andrew Krepinavich's 7 Deadly Scenarios. I've been doing a little bit of work with August Cole on the reserve side. He does sort of fictional intelligence. He's also the writer of Ghost Fleet. And I think it's a really critical one because part of what we do on the venture side is imagine this kind of future hypothetical world. And when you go back and read 7 Deadly Scenarios, it was written in 2009, but so much of what he highlighted then has either come to fruition now. There was one chapter on pandemics, one on sort of cyber and critical infrastructure. So I'm sort of constantly pressing myself to think, what are the next deadly scenarios?
That was a great list. Promise kept. All right, so our intro round is over. Let's get into some of the heavier topics, some of the meatier topics. And let's start with talking a bit about what's going on in Washington, D.C., where a lot of these decisions are being made. So a lot of us were at South by Southwest last year, a year ago. What a difference a year makes. Things are looking really different at the Pentagon. So just a quick summary, we had the launch of what may be one of the largest defense programs in a generation, Golden Dome. We announced a continuation of Replicator 1 and 2, which some thought wasn't going to keep going. We have a major push for software modernization, which I think everyone in this room is really welcoming to see Secretary Hegseth pushing. We've seen, I think, one of the largest waves of cancellations of contracts, or the threat of cancellations of contracts, wiping out the pipeline of some companies that have been really dominant players in the space, maybe opening up some white space. There's clearly more flexibility and motility, shall we say, in what the defense budget and program is going to be. And we've also seen, as a result of that, one of the fastest rises and sharpest falls of sort of a bellwether stock Palantir, which made a huge rise and then a big fall, leading to what I would describe as basically chaos. So if you guys were to predict, what do you think this administration's approach to modernization is going to be, and what do you think the impact of that is going to be for investors? Anyone want to? I'm not going to make you all answer every question, but if someone wants to answer that question, because I know I made it such a fun and easy one as a starter, go for it. You want to get
Sure.
it, David. Let's do it.
I'm closest, right?
Yeah,
living
go
in
for it.
DC. Chaos is definitely the operative word. I like to look at policy, though, because policy is what's ultimately going to drive how the dollars and cents are spent. And sure, there's definitely some intermingling with the invisible hand in certain ways that is just like forcing the action, especially with some of these contract cancellations. But moving forward, you know, acquisition communities, program executive offices, et cetera, are still bound by a lot of statute, rules, regulations, and policy. And so I look at the Senator Wicker, the Forge Act, as sort of a seminal document highlighting where the priorities of the DoD are going to be in the future, and everything else is sort of happening in the whiplash fashion, being a lot of noise. And so if you want to look at where are the priorities of people inside the department and in Congress, look at the Forge Act. It's trying to repeal, I think it has like 200 plus sections just highlighting getting rid of stuff, right? Limiting the rules and regulations that sort of bog down the system, add people to the processes. People are friction, friction is time, time is what we don't have in global power competition.
I think one encouraging area, there was a memo from the Secretary of Defense this week around the software acquisition pathway. That got a lot of press, mostly on LinkedIn, at least that's where I saw it, but super valuable. And to David's point, like that's using tools that we already have, but it's sort of giving a signal to the down and in, to everybody who is within the acquisition community, that hey, like these tools that have been pioneered, and I think I see Lauren Daly in the room, who actually was a big part of pioneering some of those tools. Here's a way where you know, like we expect you to use them, and so it's not necessarily changing the policy. I think you're right on the Forge Act, but how do we better leverage what we already have? And just a plug for everybody who's in this room, we've got amazing. That's the amazing thing about Capital Factory at this time. You've got the folks in many cases who have been like the first generation of defense tech innovation, and now we're a couple generations later.
Awesome.
Maybe I can just double tap on Morgan, and I can't believe you beat me to the punch in calling out Lauren Daly. So when she was at Defense Innovation Union creating the CSO, what it's getting after is buying product versus services or bespoke capabilities that don't necessarily scale. So it's a huge boon to anybody that like knows how SaaS works in the commercial world, and ensuring that we can start to bring those same common practices to the DoD, but sort of mandating it as the default, which is just fantastic.
Yeah, and maybe one more thing I'll add here. I think coming at it from more of a startup perspective, I was at a startup before I joined Cerberus and was working on some of our government initiatives. And I think for startups that have never actually worked with government before, it can be confusing to approach government. You're like, do I do an SBIR? Do I try to be a subcontractor on a program that, you know, Lockheed's on? Like, how do I approach this? And so I think some of the programs you mentioned, the positive in my mind for the startup community is like the priorities are clear. Like once Replicator was announced, I think startups were kind of like, okay, there's funding for this category. I personally saw a lot of more companies building attritable systems, and you know, I think companies kind of understand like, hey, this is being prioritized, there's capital allocated here, like let's focus on this. So I think that's another important part of like being super clear about what's prioritized.
Yeah, credit where it's due. That was something the department had to teach itself how to do well. And like I remember being in the rooms where people were either realizing for themselves or being told, and you were as well, David, you guys in DoD are a terrible customer, and it's really hard to discern what the demand signal is. And there was a deliberate effort to sharpen and clarify what the demand signal is, because not everything is going to be nor should be a JSIS requirement. So I think Replicator was a great example of DoD saying, this is what I need to build. And we want to see a lot more of that. I think that's great.
I think the last thing I would add to this, though, is that I think we are going to see in a much more meaningful way the DoD picking winners on some of these kind of key areas in a much kind of lumpier fashion. And I think it will lead to some kind of VC spilled milk, but I think that's okay because it means we can make investments at scale and for a length of time that's necessary.
That is a perfect segue to my next question, which is about scale. So we've seen, by some estimates, north of $140 billion of venture capital flowing into defense and dual use in the last 3 years. There's nothing even remotely that looks like a precedent compared to that. but we have not seen a commensurate set of exits yet. So I wanted to ask you guys a little bit about what you see about this bottleneck of so much capital flowing in and yet not necessarily yet flowing out, and what you think that means for the fate of these companies. Chris, I'm looking at you here.
Yeah, I alluded it to my opening comments, is that how are investors going to make their money on it, right? Because the way the DoD buys, the way these companies are going to scale, they're not going to scale like commercial companies. We're not talking about exponentials in these companies. So what are the exits? The M&A market is still pretty much closed, right? The SPAC market's gone away. Secondaries are around a lot and growing rapidly, so there's a lot of trading in non-public company stocks right now. I don't know if you've tracked that, but it's like double what it was just a couple of years ago on that. But it really remains to be seen how the majority of these companies are going to get out. Are they going to IPO? I don't know. I mean, the lumpiness of defense buying sort of precludes a lot of IPOs in this space, so it is really kind of unknown, and that's the risk, right? So unless companies can be bought, and I'm not saying Lockheed will be the buyer, but unless companies can be bought or combined, which is probably the most likely exit for investors to make their money back, then this won't be a very long-lasting activity, I think.
Let me tease something more out of there, which is I think something really, really tricky for founders to wrap their mind around, which is, let's say that you are fortunate enough to get bought by one of the largest and most esteemed primes, Lockheed. Lockheed is not trading at a 15 to 25x EBITDA average of these software companies. So if you are lucky enough to manage to have that exit to get acquired by a premier brand, how do you deleverage from a 15 to 20x multiple to a 5x multiple without forcing someone to overpay for you?
And that is probably the problem that we have. I work next to the corp dev group who does the M&A stuff. Those are the conversations that they have all the time, particularly young companies that haven't matured into having good cash flow and profits and so on. And I don't think Lockheed's unique in that way. I think most large companies don't know how to buy small, growing companies and value them properly. So I think that is also retarding I shouldn't say that word, slowing down the exit market for these companies as well, because we don't know how to look at that or predict the growth trajectory for these companies. So it is difficult, very difficult.
I think the lesson here for founders is it's always tempting to take as much money as you can raise. That's actually an incredibly risky thing to do for the next 5 years.
Because it pumps the value way up.
To something unsustainable. Sorry, go ahead.
And it limits your exit potential. So for companies, and there's one whose home is here in Austin that just raised $600 million a couple weeks ago. It's running amazing company, amazing founding team, but they've got one real exit potential at $4 billion valuation, and I think that's fine if you talk to their senior leadership team. They know and understand what that looks like. But it's a tough pill to swallow, particularly for some earlier stage investors. One other thing I would add to that is it's really challenging on the software side. The first question I get asked in any investment committee, and there are 3 of us who have invested in the defense tech space broadly on the investment team at Venra. First question is always, what is the exit? And it is not actually really an acceptable answer to say sell to Lockheed, because on our last 5 funds, we had at least a 10x. So for me to go into an investment saying maybe it'll be a 3 to 4x sale to Lockheed Martin or to private equity is really challenging. And that is the first part of any debate for these amazing companies that we as a country need, but maybe we as a capital community, venture capital, maybe not the right initial partner.
So what are some alternatives?
I think we're missing a piece of the capital stack, and I think OSC, the Office of Strategic Capital, really tried to fill that gap. Their initial mandate, much more oriented on non-defense first companies, I think made it a little bit challenging. Plus, they were looking for kind of higher revenue, but the instinct is there. I think the instinct around giving leverage to funds. So the Office of Strategic Capital had 2 programs. One was a program with venture firms, effectively to provide leverage so that 4x return could actually be sort of boosted to closer to what a venture return looks like. If you end up picking really well, it's a somewhat complicated program, but happy to talk about it afterwards. I'm sure there are a bunch of OSCE folks running around today. But I do feel like maybe there's something in between venture and private equity for whom that amazing 3 to 4x outcome is like the right outcome for them.
Yeah. So pretty sobering remarks, Morgan, Chris, on potential outcomes. Maybe on the flip side, more spending on defense coming in Europe. So as long as we don't really screw up our alliances, like that should be a market that continues to open up. I also think we still really haven't scratched the surface of selling into the DoD. It is 300-ish billion when you strip out the paying for people, paying for healthcare, paying for certain O&M bills that are like fuel. What you have left are decently sized R&D and procurement budgets. In an ideal world, the department starts to shrink their R&D spend and increase their procurement, because that's what we really want when VCs are subsidizing the R&D with the $42 billion that I think we did last year in defense tech. But Lockheed still does $70 billion in revenue a year. That's a big number to be eating into in certain areas. Maybe Lockheed's revenues go down, their profitability goes up, and along with all the other defense primes, as they start to modernize the way that they sell, because the department is saying, I want to buy product, not services. So instead of capping you at like a 9 to 10 or 11% profit margin on every dollar of revenue, you start to move more into how the commercial world buys. And so I still think there's a huge way to go in the overall national security realm. Global power competition, geopolitical fighting is going to only increase spend worldwide. So founders, like, get busy.
Wow. So hold on, let me play it all the way forward, because I never thought about this implication until just now. So what you're really saying is one of the ways to close this is to increase the TAM from the U.S. military to allied militaries, because of the black swan event that happened last week, which means we may be on the verge of a massive military buildup in Europe that we never thought we'd see.
Right.
Which means that what will be most important for founders is experts who understand export controls.
Export control and, you know, what are they looking for?
Sure. Who understand Europe. Wow. Okay. Interesting.
Can I call one more person in the room? Adrian Dan from NATO's Diana is in the back. So any founders who are interested in getting involved in the European market, you've got somebody in the room.
That was amazing. Yeah, you are now the most important person in the room, it turns out. Wait, everyone go to that guy after this is over. That was awesome. Okay, so any other takes on this, sort of like, when is this bubble going to burst? Are we good? Moving on? We're good, okay. So I wanted to talk a little bit about industrial base. There's a lot of attention on industrial base manufacturing capacity, advanced manufacturing and supply chain right now for obvious reasons. And I wanted to ask you, starting with you, Chris, again, because you work at a company that makes physical things. What do you think needs to change in America to support the industrial base to deliver this? And is there a role for the venture capital community in transforming that?
Oh, absolutely. So, we mine Lockheed's supply base for potential investments. So we wrote some software that scans through everything, checks it against Crunchbase, and look for all the startup companies. And shockingly enough, there's not enough in there. Lockheed, like every other defense contractor, is mandated to have small businesses on their programs, and 49% of the supply base are small businesses. In fact, 15,000 small businesses that we buy something around $11,000 a year from, just so that they can show up on programs, because the DCMA checks us against those programs. Those should be small businesses that want to become big businesses, right? That illustrates the fragility of the supply base, the inability to scale when we've got that many suppliers on the supply base. And I don't think we're unique. In fact, the DoD publishes their supplier list every year. We check that against Crunchbase and realize their supply chain looks exactly like our supply chain. So it's incredibly fragile, right? We together need to work better to find, smaller companies, but those companies should want to scale into larger companies to allow the entire nation to scale its capability, as well as be more resilient to problems that may come up in the supply base. So I think there's a huge opportunity to consolidate that to some degree. I'm not saying all 15,000 need to go away, but if we had 2,000 really good growing startups as part of our supply base, bringing new tech into the fold, that would be hugely beneficial to us and to the nation as well.
I hope no Congress people or senators just search.
I mean, but that's the part of the thing that we have to, look, we do business in every single congressional district, right? Big shock, right? But if you're trying to build a cost-effective and resilient supply base, is that the best way to do it? We have to really have that conversation and figure out what makes the most sense.
And also, like, I think we're at the point now where no one on the Hill should be surprised by this. I mean, like, you look at the work you've done recently. Like, senators are pointing out the flaws we all see, and there's no reason why a few thousand of those mom and pop shops and sievers mills shouldn't be rolled up into larger companies that have better margins and more efficiency, and more importantly, can invest in things like AI to modernize. Because I think it's very difficult with big barriers to entry to upfront costs to drive improvements when you're a small shop that's only getting 11,000 in revenue from a company as large as Lockheed. But if you had 20 or 30 of them under one roof, you could really start to improve things.
And those companies can't invest in their own R&D, right? If we're trying to look at how do you continue to grow, I mean, you want to work with companies that scale to the point where they're investing in their future too, not just waiting for the next contract to show up.
Yeah, you're highlighting a huge market inefficiency with the mandates around small business participation, both on direct and subcontracts. And what we saw in the hearing on the Hill this past week was Senator Ernst from Iowa really hammering what we would call sibber mills. But they're a very specific class of a type of company that is an absolute pariah on the taxpayer and the warfighter, and also crowding venture-backed startups or high-growth opportunity companies from engaging in the DoD. So I guess if I could make a call out to all the people in this room that come from lots of different congressional districts, what Joni Ernst put out is something that you should be championing, because it will help modernize the supply chain base as well as get more exciting capability to the operational field. So get rid of the market inefficiency, make sure that those monies are going to companies that want to grow and eventually invest in their futures, and then graduate from being a small business and continue the cycle of entrepreneurship that has made kind of America the most prosperous economy in the world.
Yeah, and maybe just to add a little bit to that too, kind of on a more individual company basis, we think a lot about when we're partnering with folks, what do their sources of capital look like at the early stage, and then how does that progress and grow? As deep tech investors, I feel like there is sometimes this valley of death maybe between Series B and Series D or whatever stages the company faces, where they have to really understand where capital is going to come from as they continue to grow. So I think, Morgan alluded to OSC and all their initiatives, but just identifying where that scaling capital will come from, I think is also really important for the individual companies and as investors, for it's as something that we can help companies kind of think through.
There's a real recognition, though, that production is deterrence, and I think that sort of statement across Washington has made it really clear, back to your point, Josh, on demand signals. Like, I feel like the demand signals are starting to get clearer. Definitely on the technology side, I think maybe to organizations like Lockheed Martin on the industrial base side, but I think we'll keep seeing it. I mean, even the establishment of the Office of Shipbuilding, I think at the White House this week, it's just showing that you've got like the major challenges that we should be rowing towards. I mean, I think the Chinese, I can't remember exactly what it is, but I think they're out building us on the shipfront by 235 times. Like, just the conversation at the right levels around where we need to grow, I think the market will start to readjust, but we're in the early days.
Absolutely, all that. I want to ask as a follow-up on that, which is, you can't experience the kind of progress and advancement that we're looking to in the industrial base without examining the interdependencies with all these other unrelated non-defense industries. So, for example, the chips shortages that we're experiencing, and the at best 5 to 7 years before a TSMC plant in America can produce, a line, or you've got energy grid instability, not being able to support, the data centers that we need to build to fuel the AI that's doing these things. We have shortages of, many of the critical components. We have labor and training and STEM challenges that we're facing. There's a lot of interdependencies. So I'm wondering, how are you looking at some of those systemic risks as we try to scale up?
I'm relying on the founders. Right? Necessity is the mother of innovation, and we've got a lot of needs at this time. So for me, it's sitting back, talking to lots of customers, understanding what their problem sets are, and of course some of these are at the industrial policy level. So having the conversations and continuing to have the conversations is very important, just so it sticks. But for the founders out there, and I am not one of them, so I'm relying on you, bring a product market oriented mentality to solving these problems, and make sure then you're looking at the right capital allocators, because I will say venture is not for everything. Some of these elements have to be a slow grow, maybe more debt structured, partnering with strategics, but yeah, I rely on them.
I think they should start now.
Yeah.
You'd be surprised how many times we've made investment companies start working with them, try to get them into a DoD contract or a Lockheed subcontract, and find out that half their components come from China. No, seriously, it's really shocking. Why didn't you think this was important? You're going to be selling to the Department of Defense. You need to take out. So we find batteries, motors, motor controllers, chips, everything, and they have to start all over again. If you're going to have a customer who's national security related, you need to do that work, and you need to do it now. And yes, it may cost more. Your supply chain may be strung out a little more because availability of some of those things is more difficult if you're buying from the US and Europe. But to everyone's point, one thing you said is that Europe is a market, but Europe also has a supply chain, right? We need to allow that to happen. Every time I meet with government folks, we talk about AUKUS and how we want to open up that pipeline to at least allow the free flow of technology components from Australia, UK to the US and vice versa, because that will create a big sort of common market of defense. But if we can open that more broadly, that would help too. But we do need to migrate off of this supply chain kind of notion that we got to do things so fast and so cheap, we're going to go to China for all our stuff, and then just find out that it has to all be redesigned and taken out.
When we're evaluating investments, we often talk about the number of miracles that it's going to take for that company to be successful. So we are very happy to underwrite one miracle. Maybe we'll underwrite two. If you get into 3, 4, 5 miracles, it's really challenging. And I think I share that because it's very much a multifactorial equation. To your point, is there a regulatory miracle? Is there a labor miracle? Is there a government relations and a government sales cycle miracle? And so there's that plus, am I de-risking on the hardware or software side? So I think it's a critical question to be asking, and I think there are many different pieces of the puzzle that you end up relying on. To Chris's point, you've got to start early, because I think for any founder, figure out very early what are those miracles, and then when you go and you have a conversation with a capital allocator of any kind, be super frontal about it. I want to know. I want to share those miracles with you so that I can tell your story most effectively, and we can help you de-risk it.
I just love that so much. I would love to see the slide in the pitch deck. It's these are the 4 miracles that have to happen for you to make any money from my company. But that would be the degree of transparency we need here. That's great. Okay, so we're nearing the last 25% of our time together, and we're going to turn to audience questions in a second. But I wanted to ask each of you to respond to one more piece of the puzzle that I think we have to hit, which is giving some go-to-market advice to the founders in the room. As someone that all of you have been in and around the DoD world for your whole careers, and you're looking at companies every day, what is the one thing you think these companies need to understand to be successful in the market?
Keep your core competency the core competency. If there's something you're not expert in, don't pretend to be. So if you're trying to write a proposal, there are a lot of companies out there that can help you do it. You probably don't need to hire somebody in-house in the early days, but make sure you're then picking the right proposal development support entity because they're not all the same. So from that standpoint, if you get a capital allocator, like any one of us on the panel, leverage their networks, because we're the ones who've invested in lots of companies that have tried to figure out their federal go-to-market strategy before. Don't be naive and try to do it yourself. If you're trying to hire a government relations firm to do lobbying, make sure you get advice from somebody that has supported lots of startups in the past on who are the right lobbyists to use and when to engage and what are those timelines look like. There are tons of resources out there, but a lot of them are playing, they're pitching their own product to you. Your capital allocators are always going to have your best interest. Make sure that your capital allocators have done it before. So that's my biggest advice.
I think I'd jump in and probably say find your customer champion. So find the customer for whom you solve such a deep problem or you make their workflow 10x better, and they will be your evangelist and they will help walk you into other rooms and other spaces and really be the champion of your product alongside you. I think, especially in the government market, which is so difficult to break into, I think finding that person early on is really helpful.
I agree with everything you guys said. I think as a small company, going direct to the government is probably one of the hardest things you can ever do. And we've seen many people kind of break their pick on that process. So, I represent Lockheed, so I like to say also think of partners to go to that. Hone your teeth working with a company like a Lockheed or a Boeing or Northrop or whatever. It's a great place to be a subcontractor. You'll get the benefit of working with all the 67,000 engineers we have on the team to help you become a better supplier, and then you can spread your wings and go on your own is an alternative path. I mean, I wouldn't say do one or the other, but it's an opportunity to do that as well.
I have a couple quick ones. The first one is I'm borrowing from Ben Fitzgerald, who is currently the CEO of Rebellion, but a longtime investor, who says the thing that kills startups in DoD is not no, it's a tepid yes. So to the founders in the room, know where you are on that spectrum. Are people kind of pulling you along for the ride because nobody likes to say no, even though that's 99% of what we have to do every day as venture capitalists? So just be super crisp with your customer is number one. I would say number two is use the tools at your disposal. We're seeing people use Credas a lot more. The flip side of that is know who you're then pitching that to. I had a company a week ago trying to get me to invest a $100 million valuation on a double-digit Creda. To which I was like, that may work somewhere. It is not going to work here. So I think also use those tools, but use them in the right way. And then the last one is the invisible clock starts ticking the minute you take capital, and there's a time duration mismatch between when you will see revenue from government and when your more traditional investor sort of expects to see results. So I get super clear-eyed on what that timeline looks like.
All right, audience, your turn. Over to here.
Nate Lowenthal from Commonweal Ventures. Thanks for the great conversation. It's striking to me to hear this very practical go-to-market advice. It frankly sounds a little anachronistic in the sense that the current administration is so profoundly transactional, its approach to procurement. And so, I mean, it does strike me we're living in a time where, politics has always mattered for certainly defense procurement, but seems to matter quite a bit more now. So I'm curious how you would, obviously a bit of a controversial question, how you think about advising companies in the kind of current political economy.
I'll record your answers for posterity's sake.
Yeah, it hasn't never not been transactional. I don't know what you would call or consider government relations, but trying to pay to get access to members on the Hill to then be able to talk about the capability that you have and how it helps them and their district, etc. But there are thousands of acquisition officers spread across dozens of program executive offices. There are end users with government purchase cards. that's how the significant. Yeah, that's how. Well, the civilians and their government travel cards is $1. The GPCs, government purchase cards, yeah, they're still good. But like, that is how the significant majority of acquisition is going to occur. Sure, I think one of the panelists said that there are going to be winners that are picked, and that's going to happen in certain programs. But that's still not the significant majority of how things go.
One other thing I would just add to that while Josh is walking around is just, I do think you will see in some cases, on some programs, VC dollars is almost a proxy for quality, for better or for worse. I do think there is, in some cases, in some places, sort of a look to the community that has sort of this government trade-off of, like, for every $1 DoD invested, you've got 10 from the private sector community. I think you'll see that as a metric of measurement in a way you maybe didn't see before.
In other words, respect for the presence of venture capital dollars because the buyers now are deeper in that market.
Potentially more of a signaling than it is respect.
Hi, just a question, Anton, academic researcher. So it has been 10 years since a book 0 to 1 came out from Peter Thiel, right, Palantir. And one of his big sort of philosophies laid out in that book is, if you're building a startup, you want to build a monopoly. You sort of don't want competition. How do you see, as VCs, right, investing in these defense tech startups, the trade-off between DoD wanting sort of to break out of these monopolies, have, you know, these quote-unquote open source system or open systems, more competition, and basically getting the returns on your investment that you can only get from sort of monopoly-like startups?
I think that's the heart of the dual-use or defense-first investor right now. Like, that's the crux of the tension. And I think we've highlighted it in a couple ways on the exit front, on the acquisition front. I think for every one of us, we have different strategies too. Venrock's early stage, Cerberus multi-stage, Morgan's on the ventures team, but they've got a private equity arm. Obviously, Chris from the Lockheed Martin strategic venture side. So, I mean, that is the crux of the question. I think just one anecdote I'll add there is you look at like the Army software side, and we spend a lot of time on software. They've gone from 900 software programs of record, basically, down to 300, and want to continue to consolidate because they want to have a kind of critical backbone of data that means we can then kind of maybe leverage smaller solutions on top of it. But it goes back to your question, how do you get to venture scale? And I think it's going to be really challenging.
Yeah, that also flies in the face of the DoD not wanting to call vendor lock, right? I mean, how often do I hear that? So monopoly, you know, that's sort of the antithesis of the current think within the DoD. Well, maybe that'll change, but right now, at least getting down to a core set of companies that can locally compete and maybe complement each other, but getting true monopoly power, I think that's going to fly in the face of that.
Yeah, and I think, you know, we kind of think about look at markets where the pie might just be bigger. So, you know, less defense focused, but if you look at the AI market today, like there are so many foundation model companies that are all being funded, and they kind of toggle. Like some are better today, some are better tomorrow. We don't actually know who the winner's going to be, if there will be one. And that's, you know, maybe there will be one foundation model for X or Y use case, one for another. So I think that's something I think about a lot, just like, are there markets where the pie is actually so large such that there could be a few folks that win?
Hi, thank you so much for being here. My question is, I'd love to know your thoughts or projections on the short term and long term, so this year and the next 5 years, of how the government spending cuts might affect private space defense and deep tech investment marketplace.
Can you repeat?
If I can summarize, sort of like, what's your forecast of the impact of potential budget cuts or a shrinking government this year and in 5 years on startups and venture? Is that fair?
I don't get the sense it's going to shrink, actually. I think it's actually going to go up. What we heard, and it's been the subject of reinterpretation several times, is reserving a large chunk of the budget, like 8%, I think Hegseth talked about, for new entrants, new technologies, new capabilities. So the idea is some of the older programs are probably going to get suppressed or canceled to make room for new programs. But I think the overall budget is believed supposed to go up. Well, unless we do continuing resolutions forever, but I believe it's supposed to go up.
Just one quick adjacency. There was sort of this exercise that DoD went through over the last couple of weeks of like the 8% budget cut. What does it look like? I think one of the signals, and I'm sure there are government folks in this room who could keep me honest, but one of the signals that gave DoD leadership was what could be cut. So you sort of like, let's go through the exercise. I think every military unit has stuff where they're like, gosh, if only I could cut this multi-$100 million program that nobody's actually using anymore, but we have to carry it on our books. I think part of that was the signal that is created versus the actual like DoD cut of those programs.
You know, if I could predict the future, I would be a much better venture capitalist. 10 years ago, this coming April, Ash Carter stepped on Stanford campus and announced what would then become Defense Innovation Unit Experimental. We've come a long way in almost 10 years, but there's still a significant way to go. 3 years ago, I didn't know what ChatGPT was. Now I use it almost every day. I think there's just a lot that is going to occur in the next 18 months that looks like a lot of chaos. Then probably at the midterms, the House will flip and we'll be sort of in a static moment until the next administration comes in. But geopolitical tensions will continue to rise, so I don't see the defense budgets really shrinking. In fact, I just continue to see the momentum of this, what was a parallel universe between the commercial innovation ecosystem and the national security apparatus continuing to converge, which I think is a good thing for the overall ecosystem.
I feel like that is a very fitting note to end on. Please join me in congratulating, thanking the incredible I think there's a lot of sort of like triumphalist, aren't we all great, isn't BC amazing, isn't America fantastic panels about this stuff, and you guys actually really gave some hard-hitting insights, good news, bad news, but news, and I really appreciate the candor, and I thought that was a fantastic session. Thank you all so much for sticking with us through the heat. Thanks again, Z, ATI, and